What's going on, guys, and welcome back to another video. So as there's currently a bit of a heat wave here in Cork, I thought I'd take a step out of the sun and get into the shade and discuss a matter at hand at the moment, and that's the potential of a stock market crash. So in today's video I'm going to go through my analysis of this and if I believe the market will crash, and if so, my plans going forward to counteract this. And with all that being said, let's dive right on into today's video. Here we are on my Trading212 Portfolio, where we currently have €10,068. Now at the moment we're up about €1,493 or 17.42%. Now over the last week or so my portfolio has dropped about 4%. Now that mightn't seem a lot at all, and some people might think that's ridiculous to say there could potentially be a market crash considering it's only 4%. But that 4% is in a 33 blue chip portfolio, so it's quite safe in terms of a lot of aspects. So that's kind of what got me thinking and started to make assumptions that there could be a crash on the horizon. And after doing some research as well, looking through some very acclaimed kind of authors and websites, it kind of is apparent that a lot of people are thinking the same thing. So today I just want to go through kind of my own 2 cents on this topic and why you definitely should not panic if you're a long-term investor. Now, if you're a long-term investor like me, you have to realize that the markets are cyclical and need to move up and down according to how the trends are doing. For example, if the market just went up continually, there'll be too much hyperinflation and that will not be good for the market at all in the long run. So again, it is healthy for a market to go up and down. And just an example here, it kind of forms a reverse U-shaped pattern or even an N pattern in terms of it has to go all the way up to a peak and will drop back down, just like a roller coaster. It has to go up and down. Now, as a long-term investor, this is where patience is key, and you always need to hold a cash reserve on the sideline, as I say all the time, for when these kind of events occur. If we even look at my 1 year chart on my Trading212 portfolio, it's quite apparent that a bull market has been taking place. There has been a lot of kind of upward trajectory over the last 12 months, which I'm very happy with. But again, this cannot continually just go up in value, hence why I do have a lot of cash on the sideline to take advantage when these sort of events occur. Now again, you don't need to do anything crazy here, and just because they're down 4% doesn't mean you should invest a whole lot more quickly. In fact, it could drop even more. I'm still up 17.29%, so there's certainly not a crash at all at the moment. But again, there has a lot of telltale signs at the moment in terms of a potential bubble, because a lot of stocks are overpriced. And again, once the fear starts hitting the market, which again happens every cycle, the market will start to drop because people will start selling off. Now the market drops a lot faster than it goes up in value because people will start to speculate and they'll get a bit of fear. And again, fear and emotion, it needs to stay out of the market. So as a long-term investor, the data cost averages, this is actually a good thing to happen if you're a long-term investor, because it just means you get in at a much cheaper cost, and it really does drive down your average cost to dollar cost average in the long term, giving you an even bigger profit. Now, we've seen how lucrative buying the dip can be, especially last March of 2020, where the market did have a fairly big tank for obvious reasons. Now again, we've seen a lot of people make a lot of money here because they knew that the markets would recover, just like they do time and time again. Now I don't mean the likes of the penny stock sector, etc. These are kind of blue chip long-term companies that have survived many cycles over the years. So again, if you have cash on at hand, kind of times over the next few months could make you a lot of money if you buy in at the right time. Now at the moment we can see here that Seeking Alpha on screen have a very good article up here, in matter of fact, in terms of that there's a bit of a risk-off approach at the moment. And again, people seem to, if you can throw a dart at any stock, is going to go up in value. So again, that is happening at the moment because there is a bit of a bull market and potential bubble. However, that risk-off approach can turn sour as well if the stocks do start to go down in value at all, that is. And once they start dropping, they will continue to drop, hence the potential of a market crash. We can even see on screen as well that the Dow Jones was down over 750 points this morning. Again, this is only 1 day as well. People shouldn't start jumping off and start selling their stocks at all by any means. Again, if you're a long-term investor, for anything, you should be buying more on the dip. But again, these kind of long-term kind of speculation can cause people to sell their stocks if the fear starts coming into the market. Something that you should really set aside your emotions when investing, because as long-term investing, certainly kind of keeping calm is one of the main objectives here, and is riding out the waves and buy when it seems fit. Now again, as stated as well earlier, a lot of people do tend to sell their stocks during the summer, hence why there's a bit of a drop off and it kind of buys back in again after their holidays, etc. and kind of into the winter months is when you start to see the stock market historically start to pick up again. So again, this happens year in, year out. So as there's a lot of new investors, again, just like myself as well, that aren't in the market too long, you kind of need to realize that the markets can go down as well. So again, what you should really do here is have money on the sideline, and that's certainly what I'm doing as well, and we'll have a look later on in terms of what my plans are going forward to kind of counteract this current market condition. Now, as I'm sure you're already aware, this kind of market potential crash isn't just because of one or two factors. There's many at play here that can be very complex, but kind of five that come to mind here on screen that the Motley Fool have made a very good article on are the kind of decline in bond yields, the drop in long-term rates, hyperinflation we can see here as well, quantitative easing, and also the ongoing global uncertainty certainly are kind of the five main factors at play here. Now, definitely times like this, a quote from Warren Buffett definitely comes to mind in terms of being fearful when others are greedy and be greedy when others are fearful. And this could not be more true at the moment, especially when people are starting to panic sell and trying to get out and make a quick buck. This is definitely a time to be greedy, in my opinion. Maybe not so right now, but definitely have the cash on the sideline to kind of take advantage if the market does drop a bit more. Now, obviously, this is not financial advice, and you need to do your own due diligence before investing any of your hard-earned capital. But this is definitely going to be my plan at the moment. Kind of just keep what I have at the moment. Again, we have about 10,100 euro invested or so at the moment as well. So again, I'll just start keeping cash on the sideline, ready to take advantage of when the stocks do go down in value. And that's one of the main perks as well of having 33 diversified stocks, because different sectors react differently to different market conditions, as I always say as well. So again, I'll always kind of have an opportunity to buy any one of my stocks in the red. Now at the moment, only about 4 of my 33 are in the red. So again, it doesn't really seem like there is that much of a crash on the horizon yet. But again, always there has to be in the back of your mind, if you are a long-term investor, that there is potential crashes on the horizon, and how you deal with them will make you a successful or failure of an investor. Now, don't get me wrong as well, there certainly has not been a market crash yet, but again, it definitely can be on the horizon. For example, if you look at my two main benchmarks here, my two main ETFs, the S&P 500, which tracks the top 500 companies in the US, is still up 28.5%. And the FTSE 100, which tracks UK companies, is still up 17.1%. So again, it might seem a bit strange if I do believe that there could still be a market crash on the horizon over the next few weeks. But again, there is signs here that it could potentially happen. So in terms of my own plans going forward, again, as a long-term investor, dollar cost averages, I actually kind of welcome times like this where the market does dip in value. As strange as that sounds, because again, as I stated, it just means you get in at a cheaper cost and drive down your overall average cost, the dollar cost average down, which again, long term will make all the difference. So it's kind of BAU or business as usual for me here, to be honest. Again, I will be kind of keeping cash heavy as well. I won't be investing as much over the next few weeks, just to kind of keeping in mind that there could be a potential crash over the next few weeks or months before the summer is out. So that's what I'll be doing. I'll just tip away and continue what I'm doing, and that way it keeps your emotions out of the market. And even if you do have stocks that are down in value, remember, you only lose money when you actually sell the stock, and it just gives you a great opportunity to average down. So keep that in mind as well before you consider selling any of your stocks. Also, as stated a few days back as well, I'm opening a second brokerage, probably with DeGiro. It's already open, but again, I haven't invested yet. I'm going to be using over there a dividend portfolio fully for dividends, to try to see how much we can make on average on a monthly basis there as well. I'm probably thinking about 20 holdings, blue chip holdings that is. So again, that's for another day's video, but that's just my plans and thought process over on DeGiro. And here on Trading212, again, we have just over 10,000 euro at the moment and are still up 17.4%. So what I'll be doing, I'll probably invest next week again, because I get paid this Saturday, my monthly wage. So again, next week, I'll probably start investing more into this portfolio, again, just to take advantage of any short-term dips in the market. So with all that being said, that's just my kind of thought process around the potential of a stock market crash. Now again, I know this kind of stock market crash terms or teams kind of get thrown around every few weeks and months at all times of the year. But again, it does kind of show at the moment that there is a fairly high potential over the next few months, considering that the markets have been doing so well over the past few months as well, or even year. So that's just my own kind of thought process and my kind of plan going forward for my own portfolio. Now again, as it's pretty much roasting outside, I'll probably cut this video short, because again, it is very warm, and for people of Cork, that's pretty unusual, so I might as well enjoy the sun while I can. So that's kind of the end of today's video. I'd just like to know in the comment section below if you do believe if there is going to be a potential of a stock market crash or not, and your reasoning behind it. So thanks very much, enjoy the rest of the fine weather, and I will see you all in tomorrow's video.